and it's the first tab, 5-3. And it's just, you're given 4 purchase transactions here. Okay, so now you can see that one of them has a credit term. So you're gonna have to figure out, based on the dates of these transactions, did you get the discount? Did you not? If you did get the discount, how do you account for that? So try and see if you can apply what we just did to this problem. Okay, so this first one, what accounts are involved? We just talked about this new account that we're going to be using for merchandise business called inventory. It's an asset. So I'm going to get this. I'm getting inventory. That's what this whole transaction is. I'm receiving these goods that I'm going to be selling at some future time. So this asset is going to increase. So when an asset increases, is that a debit or a credit? Debit. Okay, good. So 20,250 is going to be our debit to inventory. And our credit is going to also be 20,250. Is it cash? No. This would be coherent, but we see here that we're buying it with credit. Okay, so this is going to be our liability count called accounts payable. Okay, and we're also offered these credit terms. So if we had 15 days, what is the last day we could pay this off? What is the transaction date within which we'll get the discount? Exactly. So if we pay off this accounts payable before February 17th, then we're going to get the discount. Do we agree with that? Yes? Okay. So I can already see on the 14th we're going to pay it off. So we are going to get the discount. Okay. If this had been the 18th, right, we would not get the discount. So, but let's just do this in order. Okay. So next, we're paying $90 for freight. And we're going to assume it's with cash because it doesn't say on account or we borrowed or anything. So we're going to assume it's with cash. So I already know that there's going to be a credit to cash, right? Our order of kind of operations when we're looking at a transaction is figuring out what accounts are involved. That should be the first thing that you're thinking about. This transaction occurred. What accounts are affected by it? I still see a lot of you just like not even going through that first step. I don't know, how you guys are thinking about it, but I would recommend you read the transaction and think about what accounts are touched by this. What's going up, what's going down. Maybe there's 2 things going up. In the case of this, inventory went up and accounts payable went up. So in this case, cash is going to go down because I'm spending cash. So I know it's going to be a credit to cash. Now the question is, the obvious kind of first order is like, okay, freight expense. But I mentioned this in the lecture, and in case you missed it, when you're buying inventory, when you're paying for freight, you want your inventory asset to be fully representing the full cost of it. Okay, so if we have our T account here, so far we have 20,250. That's how much we're paying our vendor. But again, we want the all-in. How much did it cost for us to obtain this inventory, have it in our warehouse, sitting there? It's got to include this freight. Okay, so this is actually going to be inventory. Okay, so on the 9th, we returned 5,000 of the inventory. Okay, so they didn't use the word inventory. So you have to, again, you turn on your brain a little bit, understand the intent of this transaction. What is economically happening is that you have some inventory and now you're just returning it because it was defective. So you no longer, that value is gone from your inventory. You know that asset is going to get depleted by that value, 5,000. You're also not going to owe your vendor because you're returning those items, right? So you're not going to pay for them. Okay, so it's going to basically be the reverse of this. Okay, so you're going to, okay, so now when I post this, so 5,000, Okay, so look, this credit to inventory is now here. Accounts payable gets a debit 5,000. Okay, so now this makes sense, right? This now the balance in accounts payable is properly reflecting how much I actually owe to this vendor. And my inventory balance is now properly reflecting my cost. How much have I paid? I mean, I haven't paid for it yet, okay? But at least it's the theoretical cost. Okay, so now we're gonna actually pay the cash, right? We're gonna see how much this inventory is actually worth when we fully transact and close the loop on it, right? So that's what this last transaction is doing. Okay, so we're gonna get the discount. So right now, this is the gross amount. So if I'm getting so 315 net 30, we determined that we will get the discount. So what do I multiply this by to get how much I'm actually going to pay? You can do times 1 minus the discount. It's the same as 0.97. We're all good with decimals, and okay, so that's how much cash I'm going to pay. Okay, so I know I'm going to credit cash. If I were you, I would start with that. It's the most like common sense, straightforward thing to calculate. How much cash am I actually going to pay? Okay, now all the other uh, journal entry parts will fall into place. I know this needs to go to 0. I will no longer owe this vendor any money. So I know that I have to debit accounts payable by 15,250. Do we agree? Right? I'll know after I pay them off, I should have no accounts payable. Do we agree with that? So I'm going to debit, but this is not balanced, right? My debits don't equal my credits. I can't, this is an invalid journal entry as it is. So I need some third account. Do I need more debit or do I need more credit? I need more credit, right? My debits exceed my credits and I need 457 more credit. So where should what account is also affected by this? This is going to go to 0. I like that. This is how much cash I'm paying because I'm getting that discount. What about this? Is this the true value of my inventory? No, because I only paid this much plus the 90, right? It should technically be $90 plus this. This is actual cash out the door to buy this inventory. It should be this much, but right now it's this. So it's overstated. So if I did this, this is double check, this minus this. Wow, amazing. Our system works. Okay, so as long as I credit my inventory, it now is properly reflecting the actual cost of that inventory. It's now properly reflected in my balance sheet. Again, we're just talking about purchase transactions here. Okay, we're gonna then switch gears to sales transactions. That's when you are taking this inventory and you're selling it to your customer. Okay, it's going to be a different set of journal entries. So again, whenever you're doing the homeworks or whatever, thinking about this chapter, you have to think about, am I the buyer of inventory or am I the seller of inventory? And depending on that answer, you have to switch kind of modes, okay? Because there's different accounting treatments for things depending on that answer. Okay, so we now have just covered when we are buyers of inventory.